All right, we want to stick with the cyber trade. Let's get to our call of the day. It's CrowdStrike, downgraded to a sell at Redburn Atlantic. Josh, you on this one?
Downgraded.
I know, downgraded.
Is that worse than downgraded?
No, TBD. We're going to find out.
Look, this is one of the best software stocks of the year. It's obviously pulling back with the overall high-tech trade. I guess that's to be expected. This stock now, I think, has been washed out enough where if you've missed the whole run-up and you're wondering why you don't own it, this would be the type of name I'd be taking a look at. It's the second worst performer over the last week in the Cyber ETF, CIBR. And when you think about their place in the infrastructure stack and how critical all of the things that CrowdStrike does, not just cybersecurity, this is probably going to be a core holding of mine for a long time. So now you have it in an RSI of 34. It is the lowest RSI of all the names in that ETF, meaning it is the most technically oversold. It's still the second best performing software infrastructure stock in the S&P 500 year to date. It's still up 35% on the year. So it's a nice juicy pullback. If you've missed it, if you've missed the name, I like it. I like it much better than what Stephanie was talking about Fortinet, which has been in a downtrend, I don't know, pretty much since that chart goes back. There's an old Apache proverb: when you find yourself riding a dead horse, the best strategy is to dismount. I think Stephanie did the right thing. When these cyber names start rallying again, I believe you're going to want to own leadership in the space, not the fifth best stock.
Redburn also cutting the price target from 380 down to 275. That might be a downgrade. I'm not really sure.
Sounds like one.
Yeah, it sounds like. By the way, when Josh uses this term next week, call me.
What's the name of this firm? Red Roof Inn? Who is this?
Redburn Atlantic. I think you've heard of it. Shannon, your view on the downgrade, also the cybersecurity sector overall?
Yeah, I mean, to Josh's point, I mean, this is, from a individual name perspective, it's done much better. I mean, software struggled this year, right? There's been a lot of questions about where you want to sit in software. What does AI mean in terms of enterprise spending budgets? Is that just going to cannibalize any other sort of software that companies would be looking to add to their stack? But I think from a longer term perspective, there are probably three sustainable trends that companies are going to be looking to continue to invest in. It's going to be cloud. It's going to be security, cybersecurity, and likely AI, because there is likely long-term momentum there. And so I think right now it's just like which part of the pie are you able to capture, and what is that impact in terms of your ability to monetize that. And I think the other thing about cyber is that it's likely, unlike AI right now, where everyone's trying to put out a differentiated product, there is differentiation within cyber, but I think it's less clear right now to investors in terms of who's going to end up being the winner. And so I do think that you're going to continue to see some bifurcation amongst those different companies.
Josh, back to you. CrowdStrike, I know you've been a long-term holder. The new SEC regulations mandating reporting, we've seen a number of big company hacks this year, AT&T the most recent one. Surprised cyber stocks just aren't doing a lot better. They kind of crashed on Palo Alto announcing their platformization strategy. But with so many big corporate hacks this year, surprised at all?
I mean, I think they've done really well. CrowdStrike is up 135% since this time last year.
No, I'm talking about the whole sector. CrowdStrike's done well, but the rest of the sector has been quite a bit under pressure.
Well, look, the magic number that everyone's looking for on ARR, the rule of 40, there's not a lot of companies that will be able to deliver this. CrowdStrike happens to be one of them. Palo Alto's a big winner in the space, obviously, historically. But you're not going to have 10 massive cybersecurity providers who are all trying to sell to the Fortune 500. It's just not the way that things are going to go. Ultimately, if you talk to CISOs and CTOs, what they're looking for are less vendors providing more services under the same roof. And so you want to focus on companies in the space that are not specialized into one killer app, but really can wrap their arms around the entire opportunity/risk set of a company, get in there and do it all. And so I think there's a couple of companies that are going to be able to say that they do that, and most of these things will just become forgotten ticker symbols.